What's going on, guys? Today I'm going to cover tape reading. It's a topic that you guys have been requesting for quite some time. Now, I've been reading the tape for about 5 years now, and most of it's been in the microcap space. Now, recently I've moved over to the small and mid-cap space, and I found that all the skills were transferable. The only difference I found really was that the small cap tends to be, or rather the microcap tends to have a much more manipulated order book, whereas the small to mid-cap tends to just demand a lot more attention and speed of execution. So what I have here on the right hand side is a list. Most of this came from SMB Capital's website, and I've reworded it to make it a little bit more noob friendly and ASX relevant. And on the left hand side I just have a screen cap of an order book, and behind I have the course of sales. Now, first things first, before I dive into what to look for, I want to talk about brokerage. And this is an important thing to note when reading the tape. It's important to be able to scale in and scale out of positions. With FP Markets, if you join my Discord in the comment section below, you'll be met with a discount code. If you use it, you'll get 9 basis points with no minimum charge. Now, this is the difference between using FP Markets to day trade and using CommSec to day trade. In this example, you can scale in with 600 shares in multiple instances, and you'll end up paying $3.32 brokerage. Whereas if you decide to do this type of trading with CommSec, you'll end up paying $59, almost $60 in brokerage. So guys, if you want that discount, head over to Discord and you'll be met with that in that promo code, and you're welcome to use it. Now, let's have a look at this list on the right hand side. I'm going to talk through the definitions. Most of you won't need to really get an explanation of what this is. You can just screen cap it, print it, put it on your wall, and never forget it. This is effectively the holy Bible of tape reading. Everything you need to know is in this list. For those of you who are a bit newer and don't quite understand the terminology, let's walk through it. Bids stepping up. That effectively means in the order book, the buy side is getting added onto. So people are stepping up with their orders. You can see here on the left-hand side, we have 102,000 shares with 35 orders in, 38,000 shares with 6 people or 6 orders, and then 7,000 shares with 2 orders in. And if you compare that to the ask or the sell side, we have 2,000 shares, 1,000, 2,000, 6,000, 9,000. So you can see that on the bid side in this screen cap, in this particular instance of time, we can see that there is more buy pressure purely just from this screen cap. Now keep in mind that the environment changes basically at a split second, so you need to really pay attention to the order book. So this would indicate one signal to go long. And the opposite is true for shorts on effectively everything. So whatever I say is true about the bids, the opposite for the asks. So in this case, if the asks had a bigger stack on the sell side, then that would be an indicator to suggest that it's going to be a short trade. You'll be profitable on the short side. So we can look at the transactions, and we can see that if most transactions are on the ask, what that is effectively lifting the offer here. So we've got orders coming through at 294, and if the transactions here are all buys, then that determines that there's buy pressure. So we've got bids stepping up, and then we've got people buying into the sell side or buying into the ask. Now, thin orders on the ask as well. So we can see we've got a stack on the buy side, and then on the sell side, we have very thin orders in comparison. So 2,000 versus 7,000, 2,000 versus 38,000, and so on. So we can see here that this is a weak sell side, indicating there is less sell pressure. Now we've got buyers reloading the bid. Now this can be also known as an iceberg buyer or an iceberg seller. In this case, it'd be an iceberg buyer. Let's say, for example, that someone comes in and wipes out 7,000 shares at 292. A reload of the bid means that someone else off screen will come in and reload and add another 10,000 at 292. And every time that 292 gets cleared of shares, it keeps reappearing and it looks really strong. Basically what that is someone waiting at the computer, hitting the buy button at 292 repeatedly. Instead of putting all, let's say these people have 50,000 shares. Instead of putting all 50,000 at 292, they'll wait and they'll keep reloading this space here. The reason for that is if they put all 50,000 shares, other people might see that as a sign of strength, and suddenly more people start buying into the sell side, and sellers may stop selling into 292. So that's the reason for that happening. And of course, the inverse is true for the sell side. It can reload sell. Now, higher highs and higher lows, effectively that's for technical analysis, and we'll go through that in another video. That's not looking directly at the order book, that's looking at the charts. Now, ask spoofing. What this means is we can have a big order on the sell side, and that order will get pulled before it gets taken or eaten into. So let's say this 35,000 shares, for example, is a spoof order. And it's usually the big orders, the very, very big orders like this 100,000, this 170,000. Those are the ones that tend to be more likely to be fake. So what that is it creates a level of sell pressure. If we have 35,000 shares here, let's say it's 135,000 shares. What people will tend to do is they will jump in front of this big order in order to exit the stock. So instead of waiting in queue at 300, people will jump in at 299 or 298, 297, and they'll get in front of the big order. Now, spoofing means it's fake. So whoever puts up this fake order wants the price to go lower. They're adding sell pressure. You might be wondering, isn't that stock manipulation and illegal? Well, yeah, probably it's a gray area. Now, a lot of these tend to be algorithms. So whenever they pop up in the order book and they're fake, and you repeatedly see that they're fake orders, they can jump, let's say 100,000 shares from 300 to 305. It can just move 100,000 shares. And what happens typically is that these spoofs do not get filled. They are by design made so that they don't get taken out unexpectedly. So these people creating the sell pressure are more than likely queued up to buy on the buy side, on the bids. So if someone pops in, let's say someone pulls in at 294, they add 200,000 shares all of a sudden. That will create an insane sell pressure, and people start selling it to 292, 291, and maybe even 290. And if that's a fake order, it's very likely they may have a buy order here. And once they get filled, that 200,000 order on the sell side will get pulled because it was never intended to get filled. There was never an intention to sell those 200,000 shares. That's what that is. And when that happens, it usually is an indication to go long. When the sell side is faking the orders, it usually means they may have a buy order and they're looking to go long and add buy pressure. Now, little resistance to the rising price. Effectively, what this means is that there are less transactions to the sell side. So really, there's no reloads, there's no asks, there's no sell side stepping up. Now, XJO rising, or the ASX 200, it's always good to have a chart of the ASX 200. If the ASX 200 is rising, it adds buy pressure. So when the ASX 200 is rising, it's more likely that other stocks will follow, whether it's in the mining space, the IT space. It doesn't matter what sector, as long as the ASX 200 is going to the upside, that adds a level of buy pressure, and it may minimize sell pressure because more people are interested in going long with the rest of the market. Now, more specifically, you can get sector rising as well. Let's say, for example, you've got the buy now, pay laters. You've got Afterpay, you've got Sezzle, OpenPay, ZipPay. You've clearly got two market leaders. You've got, well, very clearly, you've got Afterpay as the market leader. And then you've got ZipPay that comes in second place. And you'll find that these smaller stocks like OpenPay or Sezzle, they may follow either ZipPay's momentum or Afterpay's momentum. Depending on the news announcements, of course, but typically when a sector rises, it takes all those stocks up along with it. So indicating that if your stock is stagnant or slowly selling down while the rest of the sector is rising, that may be an indication to go long. Now, lack of downticks is kind of relevant to the transactions, right? So when the buy side is wiping 294, 295, and you've got you haven't got many sellers stepping up to sell into the bid. That's effectively what that means. So the sell pressure is weak. That indicates more buying is going to happen. Now, transaction is increasing, but the price is not dropping. So that's kind of like reloading the buy side. So effectively, if you've got transactions flowing through, and we can see 294, 294, 294. So if we had, let's say, 292, we had a whole heap of transactions flowing through effectively in this range. You've got huge orders. We haven't just got 7,000 and 38,000. Let's say we've got 400,000 has just churned through 292 and 291, and maybe even some at 290. You've got a huge amount of transactions going. You've got big dollars flowing, but the price isn't dropping. Sure, it's going down 1 or 2 pips, but with all that money, why is the stock not dropping? And then what that is indicating buy pressure. So when you've got buy pressure, of course, you want to go long and you want to follow the money. Now, big transactions on the ask, that sort of relates to transactions increasing and the lack of downticks, and transactions on the ask. So that sort of all lines up together. If you got big transactions on the ask, let's say this 35,000 shares gets wiped in one go, it's very likely that there's going to be more buy pressure. So do keep in mind, everything is basically the opposite for the short side, and it should all be quite self-explanatory, so I won't bother going through the short side because it is effectively the exact same but opposite. So guys, don't take this as financial advice. I'm not a financial advisor. Take this as a general advice and general education for reading the tape. So I hope you guys have found this useful. If you have, feel free to hit that subscribe button. That'd help me out a lot. Or hit the like button as well. I'd appreciate that so much. And that's pretty much the 101s of tape reading. Thanks, guys.